In a storied career like yours, I'm sure you have thousands of examples and stories that you could use of what real strategy looks like. But could you share one that really encapsulates it for us?
Yeah, one, that's tough. Let me give you a couple as we go
Couple's
through,
fine,
Tom,
yeah.
and pick those out. And a couple of stories that I really like because it does talk about the elements of strategy and the articulation and the deliberate shifting to a new way of working. So the first example comes out of the Thomson Corporation, the pivot from newspapers into digital media over time. Dick Harrington, someone I respect and trust tremendously, was the CEO of the Thomson Corporation. At that point, the world's largest operator, very profitable operator of regional and local newspapers. And in the late 90s, Dick was looking at the landscape, sitting on top of this pile of cash in this machine that just kept throwing out profits time after time. And he looked at the rise of the internet and digital media, and he looked at the rise of the knowledge worker. And those two things are completely related in many ways. And Dick came to the conclusion that print-based, consumer-focused media through newspapers was not the way to win in the future. And he went to the board and put forward a very bold proposal, which was to focus going forward on knowledge workers and to focus on B2B media, not B2C, because business to business media was more profitable than business to consumer, and focus on knowledge workers. And he compellingly laid out for the board the case for change. And within a space of weeks, the company pivoted. They landed up selling 54 daily newspapers, 75 community based newspapers in the space of less than a year, and shifted into B2B information services. And Tom, I was fortunate enough to be Chief Strategy Officer at the Thomson Corporation for a number of years and worked very closely with Dick and the team on a host of things. But driving the shift from print to digital was a core part of what we did. Focusing on knowledge workers, doctors, lawyers, investment bankers, scientists, and giving them the tools that they needed to do their jobs. We used to obsess about workflow and what does someone do 2 minutes before they touch our product and 2 minutes after. And we would just expand. And, Thomson grew to be the largest information services provider in the world from a relatively modest background. So I thought that was a terrific example where Dick took stock of the industry, where things were, deliberately made a set of changes, and they got rid of things they didn't want to do, even though they were very profitable. So nice example. Second one, and it's probably fine to share this now because the strategy has run its course, is the global roll-up in the brewing industry. And beer for the longest time was a very local business. The product went off. Yes, pasteurization and refrigeration changed that, but it was a regional business as recently as the 1990s. Heineken might claim to be, a global brewer, but essentially they were a collection of multi-local businesses that operated. Little Belgian brewer, a company by the name of Interbrew, had fantastic global aspirations, and they stepped outside of Belgium. They made an acquisition of Labatt Breweries of Canada. And the combination of Labatt and Interbrew, called Interbrew in those days, had the princely total of 2% of the global market. And Tom, they were number 4 in the world. So, unbelievably fragmented industry. And back in 97, they sat down and did a set of analysis around the industry, the economics, where things were and how they might evolve. And they came through with 3, I think, very important observations. Number 1, the industry was premiumizing. It was all shifting to the high end, and obviously premium products have much higher margins. So, if you're making twice the amount of money in a particular segment, it's twice as attractive than other segments. So premiumization was number 1. Number 2 was that the microeconomics really impacted the profitability in the industry, and economies of scale were real. And number 3, importantly, you could afford to overpay for an acquisition initially, as long as you kept doing deals to build upon that platform and expand it and grow it. And little Interbrew, with 2% of the global market in 1997, is today a company known as AB InBev that has 25% share of the global market from a volume perspective and a much higher share than that from a profit perspective. So insights, understanding of where you're at, very deliberate actions, and they moved forward and created what I think is a fantastic company as a result of that. So 2 examples instead of 1, Tom.
Two tremendous examples. Both just when you talk about Thomson and basically selling off what they did. Like this is what we do. We're going to in 1 year's time, we're going to sell all that off and go in a completely different direction. That was a gigantic gamble, prescient in so many ways, fascinating. And then to go from a little known sort of local, if you will, uh, company to being a quarter of the world's beer. I imagine that's a lot of beer. Uh,
So yeah,
so
it's a lot of money. And the last time I looked, they had a market capitalization of 175 billion. I don't know what it is today, but when Interbrew was thinking about these things, the market cap was 5 billion. So tremendous value creation for a lot of people along the way. And I would argue we all win. As consumers, we win because we are able to get access to better products at more affordable prices. Company wins, shareholders win. Great story.